Hi guys, I'm Rohan and this is Andrea. Answering this week's student question of Moodle.
Benchmarks for an entity include competitor reports to measure industry average. They also include business previous reports and business's budget reports in order to estimate future transactions. It also analyses problems that have risen in the business and to measure recent trends. Businesses use benchmarks to look at and improve on the liquidity, solvency, and profitability ratios.
So first of all, the liquidity of the business is analysing the ability of it to convert assets into cash, and that way it'll be able to pay off its short-term liabilities. This viewer has sufficient assets and not a lot of liabilities. What that means is the liquidity is high enough that they will be able to pay off their short-term debts as they fall due. But this means the debt ratio may be a little too low. So that might mean your current ratio is quite high. Usually a 2-to-1 ratio is ideal or preferred for most businesses, but your current assets may be quite a significant amount higher than your current liabilities. So this means your assets might be not being used to their full potential. They could be used more efficiently to generate more income, more net profit. So now to look at your solvency, which is the ability of you to pay your debts as they fall due in the long term. So to analyse this, we can look at your debt ratio because you've told us your total liabilities are fairly low and your total assets are high. So that means your debt ratio is probably quite low. This is good because it's risky to have more debt. So there's nothing wrong with your solvency here. You should be able to pay your debts as they fall due in the long term. As for profitability, it's the measure of success of your business. So first we're going to look at your return on owner's equity. Obviously, if your total assets are high and your total liabilities are not that high, you're going to have a great amount of capital invested in your business. You've made a profit, but how much profit have you made? What is the percentage of return on owner's equity? So if you have a high amount of owner's equity, maybe you should be making a high amount of profit. So to determine this, we should have a look back to your previous reports and again, your benchmarks and your other businesses like your industry average. Also your return on assets, we can do a similar thing. Have a look at your profit compared to your total assets. If the total assets are quite high, hopefully your profit will be quite high as well.
So those are some pretty interesting points about analysing ratios, but I think you're overlooking one major limitation. So that would be that ratio statistics can't accurately represent every single business as sets of resources vary between each business.
Yeah, that's right. We can't just rely on these ratios to tell you how your business has gone. We have to remember your benchmarks and also specifically the type of business you're running.
So unfortunately, guys, that's all the time we have left for today, but we'll see you next week.